once we've recorded transactions in the sales journal, we're now going to need to post them. So just like we did in chapter 5 of the cash journals, we're going to post the total of each column to the general ledger. So the first figure we have there is cost of sales. So that's an expense and it's increasing, so that'll be a debit. The other effect though, and that is posted on the last day of the period because it's the general ledger. We also have stock, so this is stock that we've sold, so therefore stock will decrease, and when an asset decreases, that's a credit, again posted on the last day of the period. We have a sales column of 4,500. Sales are a revenue. When a revenue increases, that'll be a credit, and that'll be posted on the last day of the period. We have GST, so that is the GST that our business has charged debtors, so therefore that will increase our liability, and that'll be a credit on the last day of the period. And finally, we have the debtors control column. So in this case, it'll be 4950. That's an asset going up, so that'll be a debit posted on the last day of the period. Looking at it in summary, how the columns all match up, we have a giant debit to debtors control on for 4950, and then that matches up with two credits, one in sales and one in GST. So looking at the referencing in debtors control, we'll have a double reference of sales / GST, and in sales and GST we'll just have a reference of debtors control. We'll speak about what control means and why we need to use that word in a second. We also have the cost of sales figure, so that was a debit to cost of sales and a credit to stock, and just a simple reference to each other. What does debtors control actually mean? So most businesses have more than one debtor. So you can see in the sales journal below we have quite a few different debtors. So what we want to do is put just the total here of 4950 in the debtors control account in the general ledger. So looking at this particular sales journal, we've got some transactions to a few different debtors. So we've got M. Bennett has the 2 sales there for a total of 2,970. We've got one sale to A. Griffith on invoice 452 on the 4th of February for 1,100, and R. Jones has 2 sales there for a total of 880. So if we add all those 3 debtors together, we get a total of 4,950, and that's the number that we're going to put in the general ledger. What we're not going to do is make a separate ledger for each debtor. So that's actually not how we're going to go from now on, and the reason is it's going to be difficult to determine the total amount of debtors. So if we had 20 debtors, we then have to go and add up the individual balance of each one. So that will limit our decision making. Secondly, doing a trial balance or a balance sheet will be quite difficult. It's going to be a very big current assets section with so many debtors listed in it. So what we'll do instead is have in the general ledger just what's called a control account, and that'll just have the overall total for the month posted to it. What we'll do is create what's called a subsidiary ledger, and in that ledger we'll create a separate ledger account for each debtor. So you can see we've got one for M. Bennett, one for A. Griffith, and one for R. Jones. So in the general ledger we post transactions on the last day of the period. In the subsidiary ledger though, you can see that each transaction there has happened on the actual day that it occurred. So the total there of 4,950 in debtors control, that'll actually be the product of all the individual transactions in the subsidiary ledgers. So looking at how we got that data, we got the sales journal on the left, we've got the subsidiary ledgers on the right. Each of these transactions would be entered individually. So on February the 1st we made a sale to M. Bennett plus GST for a total of 2,750, so that was entered on the actual date that it occurred. February 4th, $1,100 to A. Griffith, entered on the day that it happened. On the 17th, a $440 to R. Jones. Back to M. Bennett on the 24th, and R. Jones again on the 27th. So each transaction entered on the actual date that it occurred. What we'll also have though is each debtor will pay some money off their account and possibly get given a discount. So we'll get that information from the cash receipts journal. So we've got that underneath, and in this case we'll post each of these transactions individually to the subsidiary ledger as well. So in this case M. Bennett paid back $2,600 and was given a discount of $150 on the 11th. So we'll make a credit in M. Bennett's ledger for $2,750. A. Griffith on the 19th had paid back $800 with no discount. So on the 19th we'll make a credit. Just note the reference is only cash, not cash / discount expense. and then we have R Jones on the 23rd for 440. So the purpose of doing this is so in the general ledger we don't have the details of each individual transaction. All we do is have one giant debit for the total amount of sales and GST that customers owe us on the last day of the period, and we take off all the cash we've received and the discount expense given. What we then do is post that on the last day of the period, and then we can see that each of the debits in the subsidiary ledger is just part of one giant overall debit in debtors control. Likewise, all the credits, so the giant credit in debtors control there of 3990, that's simply just made up of all these individual credits in the subsidiary ledgers. What we can do now is balance debtors control, and that's really easy now with just one entry on each side, and we get a total balance of 960. And we'll also balance all the subsidiary ledger accounts as well. So if we balance M. Bennett's account, we get a balance of 220. If we balance A. Griffith, we get a balance of 300. And if we balance R. Jones, we get a balance of 440. So looking at the total there in debtors control of 960, that's just the total of 220, 300, and 440. Looking at it in summary, what's going to make debtors control go up and down? Well, it'll go up with a credit sale and any GST we charge on credit sales, and it'll go down with any cash paid by debtors and discount expense given to them. So we'll start with the opening balance. Will always be a debit in debtors control, and then the information from the sales journal, that'll always go on the debit side of debtors. On the credit side, the information we need will always come from the cash receipts journal. Well, the debtor subsidiary account, it's just a subset of debtors control, so it's going to have the same rules. Anything that's going to be a debit and make it go up will be a credit sale and GST charged on credit sales, and anything that will make it go down will be cash paid by debtors and discount expense given to debtors. So similarly, the opening balance would always go on a subsidiary ledger on the debit side. The information from the sales journal would be a debit, and the cash receipts journal data would always be a credit.